itself is called Tyson. Of course, everybody must be knowing Tyson, the great boxer. So we are required to prepare the consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2008 for Tyson incorporating its associate. So we are told here consolidated statement of profit or loss and other comprehensive income. Below are the statements of profit or loss and other comprehensive incomes of Tyson, its subsidiary Douglas, and associate Frank at 31st December 08. Tyson, Douglas, and Frank are public limited companies, that is noise. So I can see the income statement of Tyson. I can see the income statement of Douglas. I can see the income statement of Frank. So my role this morning is to consolidate, to put together these financial statements following IFRS 10 group consolidation principles. All right. So the most important thing for me to be able to start my consolidations is to understand the group structure. Group structure, we are told here, number one, Tyson acquired 80 million shares in Douglas for 188 million 3 years ago. I love this. I love this. 3 years ago means I'm not going to prorate my financials of the subsidiary. I only prorate or take a proportion of the financials of a subsidiary if I stay with it for less than 12 months in a year. If, for example, ladies and gentlemen, I buy a subsidiary. If I buy a subsidiary in, for example, July, 1st of July, 2020, and then I'm required to make financial statements as at 31st December, 2020, like that. So it means straight away that this one, I'll have a problem of apportioning results of the subsidiary, because like now here, I stayed with this subsidiary for how many months in the financial year? We stayed with the subsidiary for how many months in the year? For how many months in the year? It's July, August, September, October, November, December, 6 months. But if the examiner tells you that you have been with the subsidiary for a period which is more than 1 year, that is an examiner who is wishing you success. He does not want you to go through the stress of apportionment. And if you look at your past papers, some questions are like that. They'll tell you that this subsidiary was acquired long time ago, more than a year, 2 or 3 years. Like in this question, they have just told us, ladies and gentlemen, in this question, they have just told us Tyson acquired 80 million shares in Douglas for $188 million 3 years ago, when Douglas had a credit balance on its reserves of 40 million. Douglas has $100 million one ordinary shares. Ladies and gentlemen, listen and listen to me very well. We have a company called Tyson. Tyson bought Douglas. Tyson bought 80 million shares of Douglas. So we have Tyson who bought 80 million shares of Douglas, and Douglas, we've been told, has got how many shares in total? 100 million shares. So then this is what percentage? We bought 80 million of 100 million shares. 80 million of 100 million shares. Percentage-wise, this gives me what percentage? Well, but you can see it's 80%. Thank you very much. So we bought 80% of Douglas. So what do you think of this 80%? What do you think of this 80%? 80% is a very big shareholding. This automatically means that Tyson is controlling Douglas. So Douglas automatically becomes a subsidiary. 80% is more than 50%. And there is nowhere, they have told us that Tyson has made arrangements here to cede its control. You know, at times you could be having a big percentage, but because you don't have time to run, to control this entity, you can say, fine, let me give my controlling stake, let me give my controlling powers to a different party. So in this case here, automatically, D becomes a subsidiary. D becomes a subsidiary. D becomes a subsidiary. And remember, this subsidiary was acquired 2 years ago. 2 years ago. We are told in this particular what year. So I'll not even be bothered with the date of acquisition, with the date of what year finance. I'll not be bothered with that. I won't be bothered with that. I won't be bothered with that. Ladies and gentlemen, listen and listen to me very well. They've told us that we are, it's 3 years ago, actually. It's 3 years ago, 3 years ago. Thank you very much. So remember, this way I've picked the number of shares of Douglas. Douglas has 100 million in total. And this company called Tyson has acquired a whole 80 million shares. So they have acquired 80% of Douglas. And then we have number 2. Tyson acquired 40 million shares in Frank for $60 million 2 years ago, when the company had a credit balance on its reserves of 20. Frank has $100 million. So then that automatically tells me, ladies and gentlemen, that this company called Frank, we have in our group structure a company in this case here called Frank, and we have acquired 40 million out of 100 million shares it has. So in short, we have acquired 40% stake in Frank. So Frank becomes who in the group now? Frank becomes who in the group? Frank becomes who in the group? Someone talk to me. It becomes an associated company. It becomes an associate company. It becomes an associate company. Remember our general rule in terms of numbers. Our general rule in terms of numbers, we have here less than 20%. Less than 20%. We have 20% all the way to 49.99999, right? We have exactly 50%. And then now we have more than 50%, more than 50%. So in terms of number crunching, whenever we talk over less than 20% shareholding in a particular company, this becomes a simple investment. I'll account for this as a simple investment. Or if the investment, ladies and gentlemen, meets the dictates of IFRS 9, I'll be able to account for this investment as a financial instrument, yes. And if the shareholding is in between 20% and 49.9999, like that, as you guys have seen, this 40% is here. This automatically becomes who? This becomes an associate. This becomes an associate. How about Mr. 50%? How about Mr. 50%? Mr. 50%, this automatically becomes a joint arrangement. A joint arrangement, and as you shall be seeing later on, like joint ventures are examples of what a joint arrangement. So if you control exactly 50%, and then there is another party controlling 50%, that's a joint venture, a joint venture. Ladies and gentlemen, if we have more than 50%, if, for example, today your company comes and buys RCM Online College, RCM Online College buys, for example, like 70%, automatically RCM Online College becomes what here? Your subsidiary. It becomes your subsidiary. Becomes your subsidiary. But now remember, we said that really subsidiary. We said really, ladies and gentlemen, subsidiary. This is how you start knowing that you're becoming old. When spellings start going away, that automatically means that your years are going by very fast. Now, ladies and gentlemen, listen. We said that this really, it is a form. It is the form, right? But according to IFRS 10, IFRS 10 nowadays is talking about what we also call the substance over form. The substance over form. Substance over form. And this has been tested. Remember, like last semester, students failed quite a lot in advanced financial reporting because most of us never took the theory areas seriously. The theory areas are very important, right? Substance over form. So for example, someone will tell you that you own 20% of Douglas, 20% of Douglas, 20% of Douglas. And then somebody goes ahead and tells you, you know what? The other percentage, which is 80%, is held by 100, is spread out equally to 100 who? Shareholders, 200 shareholders. This will signify control, even if your percentage means what here is less than 50%. Why? Because you can imagine all the other shareholders, ladies and gentlemen, will be having what here? 0.8. 0.8. If you take 80% divided by 100, right? 0.8%. And there is no way these various guys will ever sit down to agree that let us vote as a block as 80%. So still here you are the bigger brother. Even if you have 20%, you will still be taken to be what here? A parent. A parent, you're a bigger brother, you are the father here. Or the others in this case here have got what in my language you call an ochugunu. Ochugunu. Do you know what ochugunu is? Small, small, isn't it? Small, 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 small. Well, got 20% fine, but 20% is still large enough. Yes, 20% is still large enough. Great. Now, ladies and gentlemen, at times you'll be told that you have got this 20%. But arrangements have been made in a way that you who has got 20% is allowed to appoint like 4 directors out of 5 directors that the subsidiary has, that company has. So if you have an opportunity of running the affairs of a company through management, then that automatically is substance. It's not the form really, it's substance over form, right? What is the reality? So it doesn't, you could be having 1%, but if you are the one who is calling the shots, then automatically you are the parent there. And if you're the parent, then you have to do what here? You must consolidate. So ladies and gentlemen, now we have our group structure. We know who Douglas is to us. We know who Frank is to us. Great. Now, so then, sasa biashara inaanza sasa. Kama nimeshachora group structure, what I'll do, I'll go ahead and give my examiner, not any working for Goodwill, nothing. What I'll do, I'll give them what we call a proforma, something like this. You give us a proforma statement. Hata usijaze figures, wewe kuja andike proforma statement. Ukishajua proforma statement ushapita hii mtihani. Hii mtihani ushapita. I can only now see ourselves in this case here going straight away to TRM, all of us, right? Or any other place to really enjoy after exams. Ukishajua kufanya hii proforma, wewe uko juu sana. Hii proforma hii proforma ni kitu ya maana sana. Unapoanza na revenue, that is your normal income statement, right? Revenue, cost of sales, unaandika tu. Sasa ile exam na wanafunzi wengi kwa exam hata waandiki chochote, kazi yao ni kuangalia ceiling na kuangalia wenzao kama wanaandika. Unaandika tu other expenses, finance income, finance cost. Look at this share of profit of associate where it's coming. Then we have a profit before tax, we have the income tax, we have profit for the year, and then we have other comprehensive income. Unaandika. Tuko na gains on property revaluation net of tax. Tuko na share of other comprehensive income of what year? Associates. Unaandika. Now listen to me very well. As I'm writing, I'm being guided by the financial statements that have been given by the examiner. All right? So then what I'll do, I'll simply come and copy down this. I'll copy down this the way it is. Unaacha mapengo katika. Hebu tukopi chini tuone abracadabra. Tunakopi chini vile imeandikwa. Tunakopi chini sababu mimi sina kitabu, nataka mniambie vile imeandikwa. So unaandika hapo, unaandika jina ya kampuni, parent ni Tyson. Tyson must be known. So it is Tyson Group. Tyson Group. Unasema consolidated income statement, consolidated income statement for the period ending, unaunderline, utaandika mwaka pale peke yako. Unaunderline consolidated income statement ama consolidated comprehensive income statement for the period ending, unaandika mwaka yako pale. Wanafunzi wengi wa CASNEB wanajiunga kuandika hizi vitu sana, title hizi. Hiyo wanaandikanga, hakuna mwanafunzi anashindangwa hii. Kuna vitu ambavyo unajua kwa FR wanafunzi wanajua kuandika sana. Wanajua kuandika hii na kuacha blanks. At the very back, wanaandika ati God bless the work of my hands. Which work now here? Nothing. Ukitaka God to bless the work of your hands, now make in this case here next move. Make the next move. So the next move unaanza kuandika ile proforma tu, lazima una copy your table imeandikwa. So umeniambia ya kwanza ni revenue unaachana nayo. Ya pili wamekuambia ni cost of sales. Haya, ya tatu of course kutakuwa na gross profit. Gross profit, una copy tu, una copy. You guys should be able to read for me. You should be able to read for me. You should be able to read. Una copy tu. Alafu unajua some of these papers ukifanya una smile. Hapana kasirika. Kama umekuwa ukibeba mawe ya 9x9. Hapana. Gross profit, these are easy things. Gross profit. The next one is other expenses, and then finance income, finance cost. So gross profit, tuko na other expenses. Una copy vile umepatiwa tu. Unasema finance income, unasema finance cost. Una copy tu. Lakini kumbuka kuacha spaces kidogo. Unaacha spaces kidogo. Umeona hapo kuna profit before who? Profit before tax. Unaacha space kidogo kama hapa sasa, profit before tax. Unaangalia taxation ni. So tax, after umeshang'oa tax, utapata what we call the part, or we can write in full. The profit after who? The profit after taxation. The profit after taxation. Ukishapata profit after taxation, sasa unaenda, wewe ni accountant, unaenda straight away kwa comprehensive incomes. Comprehensive income section, basically we use comprehensive income section to account for revaluations, basically the gains. In most cases, angalia most financial statements, kwa comprehensive income tuko na gain on revaluation. So after umepata profit for the year, so we have other comprehensive what year incomes. So we have the OCI. That's how we call this in practice, OCI. So we have here OCI, other comprehensive incomes. So other comprehensive incomes, what do we have here? Other comprehensive income, ladies and gentlemen, other comprehensive income, tuko na gain on property revaluation. 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 Unaandika namna hiyo. Alafu unakuja hapo unaandika in capital letters. Unasema total in capital letters. Unasema total comprehensive income in capital letters. The total comprehensive income lazima iandikwe in capital letters. You know, the only thing inaandikwa in capital letters kwa income statement. Hakuna kitu kingine. Hiyo pekee yake, the total comprehensive income. Hata ukiangalia all the published financial statements, tuko na total comprehensive income. So tuko na total comprehensive, andika in capital. Unaringia examiner, mimi naandika namna hiyo sababu siende kuringia in examiner. Total comprehensive income unaandika namna hiyo. Sasa una smile. Everybody in the exam anashangaa msichana ni wa wapi huyu anaandika namna hii, na si hatuna kitu ya kuandika. Kumbe umekuwa ukikopi tu hii vitu hii. All right. Now listen to me very well. This question has an associate. If it has an associate, there are two adjustments. Hapa kwa profit before tax juu yake tu, unaandika share of associates part. Share of associates part. Hapo namna hiyo. Naandika namna hiyo. Hapa vitu mahali pawili. Kama kuna associate, hapa unasema share of associates part. Very good. Pia hapa chini, unaona hapa. Unakuja unasema pia share of associates OCI hapa. Uzuri kitabu yangu ni flexible. Wewe nilikwambia watch space. Kitabu yangu ni flexible. I like my book. Unakuja hapo unasema share of. Unakuja unasema hapa share of associates OCI. OCI stands for what, dear somebody? other comprehensive incomes. Other comprehensive incomes. So hapa kumbuka kuna total comprehensive income. The total comprehensive income, that is the one that takes care of incomes from operations and the incomes from this revaluation now. You see, revaluation amounts, we always tend to take that one to OCI because we don't want shareholders to start sharing this amount as what here, somebody? Yeah, we don't want, ladies and gentlemen, we don't want shareholders here to start sharing any revaluation gains. Those are reserves. A good student is asking there, why should we take share of associate part before here? Remember the old standard. The old standard, we used to share the associates profit before tax. Hapa. Na hapa chini huyo unasema tax of who? Tax of the associate. But you see, tax has to be taken as one component in the new standard. So we normally share, you just cram it this way. We normally share the associates part up with you. That is the new standard. It is the way it is. Yes. So are we been able to write up to there? Have we been able to write up to there? Have we been able to write up to there? There is somebody who has asked me, Mwalimu, why do we write this total comprehensive income in capital? Why? Honestly, I don't know. I always see. And this is an international thing. I told you I work for an international company. So tukiangalia swali za, not swali, but income statement ya Sony. Utaona hii kitu hapa chini wameandika in capital, total comprehensive income. Total comprehensive income. Hiyo wanaandikanga in capital hiyo. Unaona hiyo? Hapa. Hiyo ndio hii hapa. Total comprehensive income for the year. Wana scream the thing out like that. Haya, sasa tuanze consolidation. Sasa ukianza consolidation, kuna vitu ambazo nataka ujue sasa hapa kwa makini. Kuna vitu ambazo mimi nataka sasa ujue hapa kwa makini. Ukianza consolidation, kuna vitu nataka ujue kwa makini. Tuko na kampuni tatu hapo. Sasa tuko na Tyson, tuko na Dagi, na tuko na Frank, namna hiyo, Frank. Haya, wametupatia revenue ya Tyson, wakatupatia revenue ya Dagi, wakatupatia revenue ya Franco. Wakaja hapa wakatupatia cost of sales. Wakaweka hiyo, wakaweka namna hiyo. Sasa nataka unisikize na unisikize vizuri. Whenever we are doing financial consolidations, we only consolidate a parent and its subsidiaries. So consolidation is for parent and who? Subsidiary. So sasa hapa itakuwa tuna consolidate Tyson and Douglas. Franco ni subsidiary. Na kama Franco ni subsidiary, kama uko na kitabu ambao umeprint, ilikuwa umesema print last time, unakuja kwa hii column, una cancel column ya associate. Una cancel column ya associate na column ya joint venture. Hizo una cancel namna hiyo. Una cancel. Sababu gani? Because IFRS 10 tells us to consolidate financial statements of the parent company with its subsidiaries. Associate takuwa ni one liner. Associate, one liner. Namna hiyo. Mambo yake imeisha. Sasa ukishafanya hivyo, wewe ni mwanafunzi hodari. So mwanafunzi hodari unaanza kuconsolidate. Na kuconsolidate ni kuadd tu, hata hakuna maneno. Unaangalia pale revenue parenti ilifanya revenue ya ngapi parenti? Parenti ilikuwa na revenue ya ngapi? Ilikuwa na revenue ya 5 na subsidiary ilikuwa na 150. So tuko na 500 plus 150. Now let me ask you a question. Am I going to prorate? Am I going to apportion this 150? Am I going to apportion this 150? Am I going to apportion this 150? Am I going to apportion that 150? No. Why no? It's because the subsidiary was bought 3 years ago. So in this particular financial year, we stayed with this subsidiary for 12 months. We only do proration when we stay with the subsidiary for less than 12 months in a year. Lakini examiner ukisikia examiner amekuambia kwamba the subsidiary was bought more than a year ago. Hata kwa hiyo exam center inafaa uamuke tu dance. Hujaibia mtihani ama utasema umeleta fracas kwa examination hall. Kweli. Right? So wakisema hapa straight away kwamba, ladies and gentlemen, wakisema right away kwamba, all right, wakisema right away kwamba this thing was acquired many years ago, the better for us. So unawachana na namna hii. So unakuja kwa cost of sales, the same. So cost of sales the same. So cost of sales tunasema hapa ni 270 and then 80. 270 and then 80. So tunasema plus 80. No proration at all. Nachukua parent and subsidiary. Now from there, we have the gross profit. That one I'll leave it out. Unakuja straight away kwa other expenses. So other expenses, what do we have? So other expenses, we have 150 and 20. So other expenses in 150 and then we have 20. Great. From there, we have finance income. So finance income, I can see 50, 15 and 10. Finance income, I can see 15 and 10. And then, ladies and gentlemen, I'm able to see the finance cost. Finance cost given there is one of the parent, which is 20. Now, ladies and gentlemen, listen to me very well. We have the associates profit after tax. This is the easiest mark. Iki kushinda, uko na shida. Associate ni Frank. So Frank wamenipatia the profit after tax ya Frank. Unaona profit for the year. Profit for the year ya Franco ni ngapi? Kama unaona vizuri, profit for the year part ya Franco ni ngapi? Oye, Franco alikuwa anaimba muziki mzuri sana ya Lingala. Lakini as I told you, wanafunzi wa CPA, hiyo sasa mmejifanya tu serious, hata hamjui. So hata nisiwe engage sana hiyo. Unafaa kuwa mtu ambaye unafurahi sana. Pana kasirika. Hata mwingine akitoa wimbo ya Valentine, unafaa kuona umeiona pia. Right? Usikuwe too serious in life. No. So unaona profit after tax ya Frank kweli? Unaiona kweli? Unaona profit after tax ya Franco kweli? Hawataka kuniongelesha. Ya Franco ni ngapi? Ya Franco ni 10 years. Ya Franco ni 10. Na sisi tunakula tu share yetu peke yetu tu. Share yetu ya Franco ni what percentage? Share yetu ya Franco ni what percentage? Wameshasahau group structure. 40%. Tunakula share yetu peke yake tu. 40% of the profit after tax of the associated company. Sisi tunakula tu nini yetu peke yake. Now from there, ladies and gentlemen, we continue. Unaendelea oye. So ukiendelea, what do we have there? Unaendelea tu. Usikuwe na wasiwasi yoyote. Unaendelea tu. So tushamaliza pale, nitapata profit before tax. Niende kwa tax element. So tuko na income tax, nachukua ya parent, nachukua ya subsidiary. 25 hapa kwa tax. Nachukua 25 plus 15. 25 plus 15 like that. Kutoka hapo sasa ninaona OCI niko na gain on property revaluation. So OCI, ladies and gentlemen, niko na 20 plus what here somebody? 20 plus 10. OCI, other comprehensive income, niko na 20 plus 10. OCI inakuwa max ya bure. Hii hata kama umerogwa, hii kila mtu upata. 20 plus 10 namna hiyo. Aya, unaendelea mbele. How about share of the associates OCI? Are you able to see the associates OCI? Who is able to see the associates OCI? Is there anybody who is able to see the associates OCI? Wanasema ni 5. So EOCI ya associate, ukisema ni 5, you only take your percentage. Hizi ni free marks. Hata kama umerogwa, hizo unapatanga tu. Ingawa mimi siamini na urogi, hakuna urogi dunia. Mrogi si ajiroga apate pesa mingi basi. So ini 5 times what ya somebody? 40%. Now if you're keen, hatujaanza kuchukua calculator kufanya nini? Kufanya adjustments? Hapana. Because later on, kufanya computations, later on we'll need some adjustments. Haya, so tuende straight away kwa additional notes now. Lakini wacheni niwaambie kitu kingine. Unajua nini? Hata filimbi clear. Wewe useme sasa mimi nitawachia hapa niseme hizi figures ni ngapi. You will end up getting more than 30% of the marks. You will end up getting more than 30% of the marks. Yes. Now, ladies and gentlemen, here we are. Ladies and gentlemen, here we are. Here we are. Here we are. We come back now here. We are told in the notes to this account, I don't have an issue now with number 1, number 2. They have helped me to do the group structure. Tunaambiwa note number 3. During the year, Douglas sold goods to Tyson for 66 million. Remember, Douglas and Tyson, these are serious relatives. These are serious relatives. Ni kama sasa my madam akuje kusoma RCM, nitamlipisha fees. Right? Siwezi kumlipisha. These are serious relatives. So kama zimeuzania, then that is what we call an intro sale. So can somebody give me the accounting treatment of this 66? How will I treat this? How will I treat this? How will I treat this? How will I treat this 66? Somebody give me the accounting treatment of the 66. Somebody help me out. Give me the accounting treatment of that 66. It's an intra-sale. This intra-sale is a fake sale. The intra-sale is a fake sale. The intra-sale is a fake sale. The intra-sale is a less it from revenue and the cost of sales. You guys are bright. You guys are bright. You guys are bright. You guys are bright. I'm telling you, if all of us were in Nairobi town, I would have organized breakfast. A breakfast for you, yes. So any intra-sale should always be deduct it from revenue or sales and cost of sales. Deduct it from revenue and cost of sales. I hope you have taken these somewhere. I hope you have taken these somewhere in your mother. You know, there are those things, if you write them, there are those things, if you write them in your mother tongue, you can never forget them. You can never forget them. You can never forget them. Write them in your mother tongue somewhere. Intra-sales, internal sales is fake. Internal sales is fake. Right? So if it's something that you can write and even try to figuratively see them. So kama ni mkalenjin, unaona hii kitu ni kitu kidogo sana hii. Usione kama unajua problem wanafunzi wengi wanaona hii kitu ikiwa ni kitu kubwa consolidation. No. So kama ni mkalenjin, hii ni kale kamnyama kadogo tunakaita Kiptorut. Kiptorut namna hiyo. Ni kitu kidogo. Kakitu tu namna hii. Watu wakisikia group consolidation, they really panic, right? Wana panic sana. Never panic, never panic, never panic. Never panic. Haya. Mwingine ameuliza mwalimu, what about the cost of sale? Cost of sale is 48. Why can't I subtract 48 here? Why can't I subtract 48 here? Why can't I subtract 48 there? Great. So we shall overcome. We shall overcome. Hiyo takujibu saa hizi. Now, niulizeni swali. What if, for example, Tyson sold to Franco? Remember, Franco is an associate. What if Tyson sold to Franco goods worth 20 million? Goods worth 20 million. Yes. Yes. What if Tyson had sold goods that are worth 20 million to Franco? Ladies and gentlemen, remember Franco is a distant relative. Franco is like a cousin. Franco is an associate. That is genuine business. That is legit business. Hata Muislamu atakwambia yule hawezi akaoa ni sister yake peke yake, lakini cousin yake anaoa. Right? Right? So that is genuine business. Never start canceling sales, ladies and gentlemen, in this case you're made to your cousins. You will run out of business. If all your relatives start coming to your business unawapatia free, atu ni cousin wa kutoka kina mama, no. An associate is a distant relative. Never cancel. Their sales do not fall under what we call intra-sales. They don't fall there. Are we together up to there? 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 Great, clear. Thank you very much. Thank you very much. Now, ladies and gentlemen, listen and listen to me very well. When there is an intra-sale like that, and you are, in this case here, the accountant who has come in for interview, somebody tells you there is an intra-sale. What is the next thing that you should think about? Great. So joint ventures, those ones, also you don't do what here, the old standard we used to eliminate, but I'll come back to that. You know, this thing is what here, it's step by step. First of all, we finish with associate, then I'll be able to do one questioning over joint ventures, etc. Thanks for asking that. Thank you, Nancy. Nancy is a good lady. Nancy ameniambia, ya kisikia kuna intra-sale, the next thing atajua, lazima ahudumie. The next thing ambayo lazima afanye ni UPS. So lazima atacalculate UPS. So I would want to give you guys exactly 5 minutes. You guys need to calculate UPS for me. I can see somebody in this case here going home with another 1,000. Please, I have a debt of Helen Sewe. Helen Sewe was the first one to come to this class, right? Helen Sewe was the first one to come to this class, right? Niko na deni yake. UPS. I'm giving you 5 minutes. Think through this question. UPS itakuwa ngapi? UPS itakuwa ngapi? UPS itakuwa ngapi? Think through. Right? Classes will go on as usual. But for mwalimu is a mzee who believes in family quite a lot, and given the sacrifice that I make, on Monday I'll be traveling, so I'll not be able to make in our Tuesday early morning class, but I'll be here for the evening class. Tuesday evening I'll be here, but Tuesday early morning class, forgive me for that. Tuesday early morning class, count me out. Tuesday early morning class. Yes. You can see Caro and reason nini itakuwa Monday. We shall overcome. Caro, you must be the best. 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 Yeah, I have a son, a daughter like that. Just this one only because of what, yeah. So I'll not be in Nairobi on Monday. So that automatically affects my Tuesday class, AFM. That affects my Tuesday early morning class, but not Tuesday evening. Tuesday evening, I'll be here. Thank you very much. Tuesday evening, I'll be here. Very good. So far, niliwaambia accountants wengi, hii maneno mshikanishangi haraka. So far, you can see so many of them that I understand, but we shall overcome. So many of you understand what is happening on Monday, and you cannot blame them. You cannot blame them. Accountants are too serious. Now, UPS, ladies and gentlemen, for us to get UPS, we normally take profit margin times my sister here, RISPA. We normally take profit margin times remaining intra-sales. So profit margin hapa ni ngapi? Ukiangalia ka profit ambako huyu jamaa alitengeneza kwa hii biashara ya internal, wanatuambia profit ambayo alitengeneza ilikuwa ni ngapi? Wanasema the sale is 66, it had cost them 48. So the difference. So remember, for us to get profit margin, we normally take, in this case here, profit all over sales times 100. Profit all over sales times 100. So profit here will be 66 minus 48 all over the internal sales, which was 66. Itakuja ngapi? Is it 12? Ama ni ngapi? Ama ni 20? I don't know. Hebu ni subtractie. 66 minus 48 ni ngapi? 66 minus 48 ni ngapi? 66 minus 48 ni ngapi? 18. Kwa hivyo itakuwa ni sawa na 18 over 66. Hii hata star divide, sababu najua itanipatia answer ugly. Hii 66 ikai hii star divide. Kwa hivyo nitakuja hapa oye, niseme my UPS will be equal to profit margin, which is 18 over 66 times these goods that we sold within the group. How much of them are still remaining in inventory? How much of them are still remaining in inventory? They've told us here, ladies and gentlemen, and I've seen this kind of a question severally in your past papers. They've told us none of the goods had been sold by the year end. None of the goods had been sold by the year end. So all these 66 ilikuwa hapo. Kwa hivyo inamaanisha inakuja ngapi somebody? UPS is unrealized profits on stock. Unrealized profit on stock. So unrealized profit on stock, could you kindly help me out here? Unrealized profit on stock, could you kindly help me out? What will I do? What is the accounting treatment? When I get this unrealized profit on stock, what should I do? What is the accounting treatment? Please write this down in your mother tongue, the accounting treatment of UPS. Unfortunately for mwalimu here, mwalimu travels quite a lot. So hakuna lugha ile inaweza kuambia, sina idea. Okay, siwezi kuwa najua yote, right? Lakini kama for example ni Kiborana, tunasema akam dancer. Kama ni Kimeru, tunasema hii hakuna maneno, otemanto. Ni kitu kidogo sana hii. Ni kitu kidogo sana hii. Ni kitu kidogo sana hii. Aya, tuko na Nana. You see, Nana is a big name kwa ile kipindi yetu ile. Kuna kipindi yetu tunapendanga tunaangalia hata kama sisi ni wazee sasa zingine ukifika nyumbani mapema. Nana amesema kitu mzuri sana. Amesema this one, whenever she sees UPS, she'll have to add it to cost of sales. You add it to cost of what here? Add it to cost of sales. Now, because I don't have a balance sheet here, I'll not even bother of the other treatment, although I've seen some students have written there. But the most important thing is that I'll come and add this one to what here, somebody? To cost of sales. Caroline John, you asked me a very good question, but the cost of sale is 48. And if you take minus 6 plus 18, if you take this, he'll be able to take you that cost, but you don't want to look at it that way. The most important thing, is there an interest sale? Yes. Have I canceled the interest sale from sales and cost of sales? Yes. The next thing, look for cost of sale, look for UPS, which you add to cost of sales, Great. Thank you very much. So tunaendelea mbele, ladies and gentlemen, tunaendelea mbele. So tukiendelea mbele, tunaambiwa namna gani sasa? Wanasema note number 4, group policy is to measure NCI at acquisition at fair value. The fair value of the NCI controlling interest in Douglas at acquisition was 40 million. An impairment test carried out at the year end resulted in 15 million of the recognized goodwill relating to Douglas, which is a subsidiary, being written off. Great. So goodwill of 15 million has been written off. So where do I take this goodwill impaired? In my income statement. Goodwill impaired in my income statement. Goodwill impaired in my income statement. I know it's going to straight away be expensed, but in which category? Mary anasema other expenses. Yeah, in this particular question, because we don't have many categorizations of other expenses like administration, etc. For sure, we shall come and it's an expense. Come and put it here plus what here? Plus 15. Plus 15. Plus 15. Great. Ladies and gentlemen, here we are. Here we are. We are told here that and recognition of impairment losses of 2.4 million relating to the associate, So 2.4 million impairment loss related to the associate. So what do you think of the 2.4 million impairment loss of our associate? What should I do with it? 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 The associate has been impaired. The associate has been impaired. Remember, you cannot use 40% because look at this. Read this statement very well. Read this statement very well. And recognition, you see, they recognize their share. Recognition of impairment losses of 2.4 million relating to the investment in franc. So already, so this 2.4 million, ladies and gentlemen, you simply take it the way it is and subtract it here. You see, you are taking the profit of the associate, but this associate has been impaired. So whatever portion of its profit are taken, have to reduce it. So minus 2.4 million like that. The associate has been impaired. Alternatively, you can take this to the other expenses, but the best is to handle it this way. The best is to handle it that way. And now, ladies and gentlemen, that is the end of the income statement. So now come here and give us these figures very fast. Come here and give us these figures very fast. The people I sympathize with, I normally see some teachers are still teaching group consolidation with the T accounts. CASNEB itself said no. If you look at all answers of CASNEB group accounts, it's like this, right? And then the other thing, that concept of teaching using the T accounts, you can teach group consolidation alone for how many months? For 2 months. For 2 months. Any CI of 40 cannot come here, Robert. That one automatically will come in. Will come in the balance sheet. And then there is also another section here, small section, although I don't advocate for those marks. These are the marks I want us, ladies and gentlemen, to work with. Great. Yeah, John already has seen that the T accounts are very hectic. Like the one of retained earnings T account, but imejaa board hivi, right? So unapata unachukua more than unaona. By that time vile mna let down. Nyinyi mna let down, amwangalie video. Mungu mnaangalia video, group accounts hii nafunza group accounts exactly na how many lessons? 4. Akisa amwangalie video, so inabidi nianza kurudia vitu kama hizo. Hii nilikuwa nimesha cover already. Kwa ile swali ya pedantic. Nikakutumia ka video kingine ka pedantic bado paka balance sheet ka balance. Juko ulikumbuka hiyo swali kuangalia. Pedantic paka balance sheet ka balance. Juko mnakumbuka. Like, to tell you the truth, ladies and gentlemen, this to me is a waste of time. Because the only thing that I would have done was to give you this associate concept in form of a video. Niende kwa past paper swali moja, alafu nifanye group cash flows swali 2. Kuisha maneno. Kutoka hapo tunamaliza. Kisa sasa wengi hapa nyinyi nakaa ni kama wale wanafunzi wale wa soft life, Amjui hard life. Amjui hard life. Nyinyi wanafunzi wa Cerelac. Wengi hapa wataniambia kina Sylvie hapa, wataniambia mwalimu, you know what? Tuko very busy at our workplaces. Tuko very busy at our workplaces. Trust you me. Trust you me. If you knew how this Aura man here is busy at his workplace, you'll be surprised. It's about time planning. It's about looking at your future. It's about all those things you can do them. You know, Caro, you're given 24 hours. But now you see the problem is that unapata bado wengine hapa wanataka wapige simu, wapige moshene 30 minutes. All that time I cut it. Yeah, all that time I cut it. Mimi sina time, nikipata kwa njia, hata kama friend yangu sana sana ni hi, how are you doing? I mean, are you okay? Yes, I go on. Right? Unaenda mbele, right? Utapata bado mwingine kama ni lunch, lazima akule lunch. No. Lunch I'll do 30 minutes for example, lunch. There must be some time ya ku nap. Mchana lazima ulale kama 30 minutes pia, more than 30 minutes. Very important. Kama kuna ofisi mzuri, kuna kitanda, very nice. Unalala. Right? Alafu una make sure ukiamka sasa uko na nguvu. Right? Unakuwa active in whatever you're doing. Because wanafunzi hamwezi watch video. Utaniambia aje? Hii kitu hata ukiwa kwa gari unaangalia tu. Unaona? Video zangu kama zile za audit. Kazi yako ukiwa kwa gari unaweka hizi, unanunua hizi nini mzuri. Unanunua hizi, inaitwaje hizi? Headphones mzuri hizi. Si ile ndogo ambayo unaweka kwa masikio na kuumiza. Hizi wewe kazi ni kusikiza tu, unasikiza, unaenda kwa gari ambayo haina muziki mingi, unaona? Then you survive because, ladies and gentlemen, once you pass these exams and then you happen to know my advanced Excel, I can tell you in the next 2 years, out how many, one day you look for me, utaniletea gari uniambie mwalimu ulinibariki. Right? I've been given very good gifts na wanafunzi wangu. Very good gifts na wanafunzi wangu. Kama saizi, we are going home to Kisii to open my house. Ukiona like mwanafunzi wa Victoria, anafanya kazi Victoria, CFO, Victoria Furnitures, ameniambia mwalimu viti hizi na hizi na hizi na hizi, kuja beba. Kwa so long as beba. Viti executive. Right? And all that was because of some of these small what here efforts we make here. So if we have that particular vision, that this CPA is a big thing. We finish things, we do advanced Excel, we are good in QuickBooks to make applications here and there. So the first thing ni kupita. So lazima ujimotivate. Hapana enda kwa kitanda ala mikilia kama leo unataka kulia. Yaani mtu mzima. Bado upige blanketi teke ta. Uamke mara moja. Kashetani kana kuongelesha kaanza kuambia tiomba ukiwa kwa kitanda. Hiyo ni maombi gani unaomba? Hakuna maombi, huyo ni shetani anataka ulale throughout. Rona. So there is quite a lot that is ahead of us, and we really must have a very fixed scheme to be able to make the sacrifices needed. Right? And I like the bold decision you guys made to combine these things despite what are the 3 months, which are barely enough, right? But now, that is an alternative you took, which is good, but we must pay the price. We must pay the price. We must watch these videos. Ukiangalia, mimi nilikaa na mnanika audit. The time I waste mchana nikaangalia, ni mingi sana, you'll be surprised. Ni mingi sana. Right? Na ukishajua kuwa kama British, wewe kuishata kwa kazi, una mambo mengi, ni hi, how are you? Right? Good day, great day. Unajua cha unafanya. Ukipata 30 minutes umeiba kidogo, video. Unajua cha unafanya. After all ni hii. After kupita hii mtihani, come next semester, mimi nataka tupige moshene 100% na kupiga raha. Right? Tunatuanga raha kweli kweli, lakini this time round there is a price to be paid. Yes. Right. Yeah. So turudi hapa jameni. You guys were giving me these figures and I can project them. Sorry, a little bit, at times I become a bit tough. I'm a very good man, by the way. But you see now, I have also a bigger responsibility of mentoring you people. I must get away of you guys saving time and doing these things. Because sisi hatutaki miaka 5 kutoka leo tupate mtu maskini kwa barabara, mwanafunzi maskini. Hata mimi nikiwa maskini 5 years from today, ukinipata kwa barabara ni chape. Ndio leo naweza kuwa maskini, lakini 5 years from today nitakuwa tajiri sana. Hata utakuwa tajiri nikipata ukiwa maskini 5 years from today na kuchapa. Utanipea ruhusa ya kuchapa wewe? Yaani hizi vitu tukishikashika kidogo mtakuja kusema kwamba mwalimu alikuwa anasema ukweli. Hii ni utajiri mimi nakupatia live. Akisa wengi nikikutumia video, you choose to look the other way. Upata failure AFR, mpaka karibu anze kwenda kwa mganga. Ukisema umerogwa, hakuna kurogwa, ulikuwa unakataa kuona video. Ilikuwa question not 29. Ilikuwa question ya Tyson. Ilikuwa question ya Tyson. Yes. So for revenue, is there somebody who is able to get this 584,000 revenue? Is there somebody who is able to get 584,000? Cost of sales, is there somebody who is able to get 302? 302, I mean, 302. 302, please subtract. When you subtract, you'll be able to get this 282 as your gross profit. And then we have other expenses. Other expenses, if you add them, you'll get 185. You're subtracting this, put this in brackets. Finance income should be positive now because it's an income to us, 25, right? We have finance cost. Finance cost is the 20 that you pull there. And then we have this share of profit of associate. The share of profit of associate, I can see a figure of what here, 1 point, it's a profit, remember. So it's 1.6. So deduct this, add this, deduct this, add this. You'll be able to get, in this case here, 103.6, doing the adjustment to this 282. You take 282 minus this plus this, minus that plus that. We get 103.6. And then we have the income tax for the year, which is 40. Income tax for the year is 40. Then we have the gain on property revaluation, the OCI, 30. And then we have the share of the associates OCI, 2. So if you add the OCIs, we are getting 32. And when you take 32 plus this 63.6, we are getting the total comprehensive income for the year, which is 95.6. 95.6. Is there somebody who has been able to get this thing up to there? Is there somebody who has been able to get this thing up to there? Is there somebody who has been able to get this thing up to there? Is there somebody who has been able to get this thing up to there? Please talk to me. Please talk to me. Talk to me, please. Talk to me. Talk to me. Somebody who has been able to get those figures. Somebody who has been able to get those figures. Jacqueline, Lucy, Bila, Wairimo, yes. Philistas, yes. Jamie, yes. Purity, yes. John Barasa, yes. Thank you so much. 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 Great, 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 great. Now, ladies and gentlemen, the time that is left, we can't start really any serious question. I would beg in this case here that we stop there. But next time, ensure that you watch the 3 videos, plus this video. I'm also sharing it immediately after this. Ensure that you watch them. Ensure that you watch them. So is that okay? Is that okay? Is that okay? Is that okay? Yes, very good question there. When we have sub-subsidiary, all those. The question that I'll be doing next will be having a joint venture and a sub-subsidiary. Like now here, if, for example, the parent has a subsidiary, has company A, and the company A happens to be having another one called company B. So this, for example, could be 60% of A, and then we have A owning, for example, 55% of B. Right? Right? Yes, I'll do that. So then at the end of the day here, if A is a subsidiary of P and a B is a subsidiary of A, then this B will be called a subsidiary. Will be called a subsidiary. We shall be looking at this in detail as well. But that will flow automatically, especially if you have understood these basic principles. Ciao. Bye-bye.